I'm Ashton Addison from EventChain for Investmentpitch Media and FinTech News Network. And today on Blockchain Interviews, we have Grant Lawrence, the chapter president in BC of the Valhalla Angels. Hey Grant, welcome to the show. Thank you so much for taking the time to be here, and it's a pleasure to have you today.
Thank you, Ashton. Good to be here. Thanks for having us.
You're very welcome. If you could please start by giving a little bit of background on the Valhalla Angels group and your experience with angel investing so far.
Certainly. So the Valhalla Angels group started in Alberta in 2003. So we've got now 4 chapters across the 2 Western provinces. We're the most active angel group in Western Canada with about 140 investors across those 4 chapters. And I started to help manage the BC groups 3 years ago. And so my journey as an angel has been about 4 years long right now, making investments, assisting the startup founders with how to improve their pitch and look at their market space and so forth.
That's great. And I guess the key question is, why should people become an angel investor, and why did you become an angel investor?
Certainly. So I'll start off with my own journey. I've always been in the tech side, and I was seeing that there's a lot of new startups coming out, but they didn't have some of the experience necessary to accelerate, to grow. And so I've been lucky enough to have a pretty good career, and I thought this is a way to give back. Of course, I also like the ability to live vicariously through those startups, so I don't have to do all the work. I could just do some advice and watch them work hard and come up with really cool innovations. We just see so many cool innovations with the number of people that approach us to get in front of us. And then, of course, there's the returns. So taking a portfolio approach to the investment. So you're going to have some winners, some losers, and of course, maybe a couple home runs here and there to make up for everything else and to even it out and give a good return. So there's, a lot of people have different reasons, but those are my reasons. Some are philanthropy investors. Others want to change the world by investing with their dollars and voting where they're going to place an impact investment, let's say, for a social cause, or clean fuel, green investments, and so forth. So there's a lot of different reasons for people to get into it. And we're seeing people that are retired that are well off want to also give back. So we're seeing an awful lot of people come out as advisors, as mentors, as people that can make introductions to key industries and key businesses. And of course, being able to participate and be on the board of directors eventually when they're big enough to have a board.
Mm-hmm. That's a great answer, Grant. And I know some people would think, the first thing you would say is, investing is for the return. But there's just so much extra value in there, especially when the average age of entrepreneurs is getting lower with technology. And a lot of these are just coming out of their teenage years, or they're very young entrepreneurs. And to be able to act as a smart investor, or an investor that has a lot of insight, as you've had experience in the industry, I'm sure there's a lot of value in that for both the angel and for the entrepreneur. Would you agree?
Yeah, I would. I would say the upcoming entrepreneurs, there's folks that love to solve the problem, and then there's folks that they're in love with their product and it's trying to help them. Okay, your product may have a fit, but let's make sure it's really the problem that's going to be solved. So the ones that are in love with solving a problem have a much easier time of going, okay, that my baby's not really beautiful today. I have to go and change it because the problem's over here. It's not the problem I thought it was solving. So adapting, and the common term, the pivot. So you're right on there.
That's great. Now, how much money should an angel investor have lying around before they decide that they want to become an angel investor and start throwing it in investments?
I would say that the first question is to ask, are you an accredited investor? So a lot of people don't realize that they already have reached that threshold, which is defined in Canada by the federal government, saying, hey, if you've got so much in assets, or you've earned so much over the past couple of years, there's a number of different definitions that you can qualify as a accredited investor. And then the next question to ask yourself is, how much of this money am I willing to put into this risky asset class? It's 10%, is it 15%, is it 20%? Knowing that it's going to be a long time before I see something back, and I may not see anything back, right? So you could be waiting 5, 7, 10 years to see some of that cash flow come back that you put into these startups and put your trust in these startups.
Definitely.
So the dollar figure, it's up to you as a portfolio.
And would you say that Well, angel investors are usually investing their own money, but they tend to be investing really early on, and that's much higher risk as opposed to investing at a later stage. Is there a tendency for angels to just want to take on this high risk? Is it for higher returns, or maybe it's just they have, there's more access to early stage deals because venture capitalists aren't really ready to invest in those deals at the time, and angels need to step up and take that risk?
Yeah, correct. There's a big gap between your first funding, which is going to be yourself, max out your credit cards, your friends, your family, and then there's a big gap until you get to the venture capitalists, or you're bankable, or you're able to get funding from your revenue source, because there's a lot of that happening now where you can go and take loans against your revenue. And then so that gap is where the angels come in. And depending on the angel, they should have, not all of them do, a thesis. What do I like to invest in? So it could be an industry, it could be a geographical location, and also could be, when do I want to invest? What stage of the company do I want to invest in? Am I going to invest in the ideation stage where they're just thinking about the ideas? It's a thought exercise, they've started to paper it. Or is it going to be when there's traction? So the company's the product's almost out. They may be in pilot with some marquee accounts, or they have 50,000 downloads, but they haven't monetized it at all yet. So there is no revenue, but they're getting followers and users. So you have to determine what part of the risk scale you're ready to invest in. And also, are you ready to invest the second time when the founders come back for the next round of money, so that you can continue to grow with them. So you may invest when it's at X valuation, and then when they come back for the next round of money, they're at 3X. So do you want to invest again? So you now start to grow with that investment.
Very true. And I guess every angel is going to have their threshold on how early they want to invest, but at the end of the day, they're likely looking for an exit. Now, what does an exit look like for angels?
Well, the exits can vary, obviously. The average length of time is going to be somewhere between 5 and 10 years, where you're going to have your money tied up with the founders and the company growing. So in Canada, we do ask that question through one of our founders' base camps that we have. What do you think the average exit size is in Canada? Because when they come and pitch to you and say, and here's how we're going to exit, and here's the valuation we're going to exit at. Well, the average exit size in Canada is about $30 million. So let's say it's just a combination of IPO or acquisition for the moment. So when they see, the Canadians see these huge exits, hey, it's $100 million, it's $200 million. Though that's not the reality for most companies. Yeah. So that $30 million could be a merger acquisition type of play, or an IPO. And those are the most two common ones. There's also structured exits. There's selling off some of your IP. It could be a joint venture where you can get your money out. The venture capitalists could come in and say, hey, I want to buy out all the previous investors and run with this. So there is a number of different ways to get your money out.
Yeah, that's great that you mentioned the investment horizon was my next question, and you sort of hit the nail on the head there with 5 to 10 years. I'm guessing that's the average, but some trained entrepreneurs like to say, hey, we are looking for a quick exit. In your opinion, what do you think about quick exits, or people that are just looking to get they do have the shareholders' best interest in mind, but they're looking for an exit strategy really quickly? What do you think about that?
When we see that, and we see so many, that when somebody says a quick exit, we tend to not believe it. Well, in some ways, some people do math and say, well, I'm going to double it, and that's the minimum, or I'm going to add 5 years to it. So, because we know that even though they're drawing this nice graph going up to the right for revenue, we know that it's really, more sporadic, and we're in the lifeboat with them, right? We're there on the journey for the next 5, 7 years together. And so we don't think it's really going to be 2 years out, 3 years out. Those are the very rare occasions.
Yeah, that's great insight. Now, another question I have is some of these hot industries, at least in Canada here, like cannabis, blockchain, and mining, often build companies up for a public play, and that's their exit strategy is going public. Do you put those in a different kind of category where like they're sort of built for the market, or do you consider a merger and acquisition, or like a joint venture and an IPO potentially just sort of in the same, whichever exit strategy is appropriate for the company is the one that they're going to take?
Yeah, at that point, if they come to us, we don't see a lot that say we're going to go and do a reverse takeover and Take the shell company of somebody that's already listed on the stock exchange. That's typically a further discussion. We're seeing them at an earlier stage,
Yeah.
and we're typically helping to get some revenue, some traction, product market fit, make sure that they're going in the right way, that they've hired the right people. Because very often we're seeing product related people, they may not like to do HR or sales. So sales is a weak spot in a lot of startups. So that discussion about what the exit is, even though they have an exit strategy slide, we all know that there's some challenges there, and it may come out to what you've just stated. It's something to do, go in public or reverse takeover. But very often that's a future discussion.
And to further that, when you have the average exit at 5 to 10 years from now, at 10 years, pro formas and exit strategies almost 99.9% of the time change within even 2 years, right?
Yes, definitely. You're right in the know. So that comes back to looking at the team as well. So if somebody's already got experience and they've proven they can do growth, then that makes you much more confident to say, okay, these pro formas, even though we know their best guesses, we have a little more confidence than somebody that says, okay, this is my first time at the rodeo. I'm going to see what we can do, and telling us these are true. So we really do discount pro formas just because it's so far out. Now, if they're on the other hand, if they come to us and say, here's my top 9 customers, I'm already $1 million in revenue, and here's my pipeline, and we know the proven predictable sales cycle, then you go, okay, your pro formas have a lot more weight.
Yeah, definitely. Once the cash flows start coming in, and you have historical cash flows, it's a lot easier to predict future cash flows. But a lot of these early stage startups for angels are pre-revenue, right?
They're pre-revenue. I would say a few of them get through our deal screening process for pre-revenue because we do try to optimize their opportunity to raise capital through our members. Meanwhile, we want to make sure that the members are going to say, hey, that's really a good tech, good team, good product fit, and I'm interested to invest. So we're bringing the both of them together to ensure that they have a high success rate. We're somewhere around over 33% of the companies that do make it through our deal screening raise money. So that's a pretty big number. So we do a very good job of helping them out going forward.
That's great. Congratulations. Now, we talked a little bit about this before, but some of these investments turn into what you like to call zombies. Now, could you explain what a zombie is to the viewers?
Right. So there's a couple different classes of zombies. So one is that it's turned into a lifestyle company. So the founders are very successful. They got their customer base. They're churning money in. It's giving them a great amount of cash in their own pocket because they're paying themselves well. But they haven't yet given back to the investors. That could be family, friends. So they may have some difficult discussions with family and friends around Christmas time. And then, of course, the early investors being the angels. So that's one. It's a lifestyle company. The other one is the zombies where they're going up and down and up and down. They just maybe keep on raising money and then, we got one more customer. So those that go on for 10, 12 years, you haven't recognized any revenue back to yourself, any return. And at the same time, you can't go, okay, that's enough. You have to go and declare bankruptcy and close the company. So at least I can write off against my taxes something. So that's a zombie. They're not exploding like they said they were, and they're just floating along down the river.
Yeah, that's great. And now, what advice would you give to entrepreneurs that are interested in reaching out to Valhalla or looking for angel investments?
I would say go and attend an angel investment forum. So at Valhalla, we put aside a couple seats for each forum for guest entrepreneurs. So they can actually see what the process is, what the questions are that come from the angels, and they can also then change their pitch deck to recognize that. We do have a recommended pitch content. We don't make it a template because everybody's got their own style and uniqueness to presenting, so we want them to be different. But we also make sure that here's the items that you need to cover off, and here's the recommended amount of time on these items. So you don't get, I'm going to spend 3 minutes on product, and that means I didn't get to talk about the return to the investor in the deal, right? You chewed up time too much in one spot. The other suggestion I would do is look for mentors. Like there's so many people out there that are willing to give advice. If you look on LinkedIn and say, hey, get a warm introduction, and then ask for some advice from them, people are willing to help out. And a little plug for our Founders Base Camp that we run. We've had about 1,200 founders through it so far. It has a net promoter score of 98. That one's a very good one to help you live in the shoes of an investor for a weekend and modify your pitch and also come up with a capital funding plan. So some pretty powerful outcomes of that, Founders Base Camp.
That's great. And if entrepreneurs or angels are looking to learn more about Valhalla and get involved, what is the best way to do so?
Just go to the web, of course, and look up valhallaangels.com. And there's 4 or 5 tabs in there. There's some resource tabs. There's for founders tab. There's for entrepreneurs tab. There's an events tab. And you can find all sorts of information there. And you'll find all of us on there as well. So you can reach out to us as well individually if you wish.
That's great. I'll leave that link in the description box below. That's all the time that we have for this interview, Grant. But thank you so much for taking the time. It's really been a pleasure speaking to you and learning about Valhalla. Let's follow up in the near future.
Yes. Thank you, Ashton. That was great. Good questions.